Hey, what's up guys? John here. About a month ago, I did a video saying that the inflation fight is a lie. And here's what you need to know. And in that video, I said that what is going to happen is energy prices will only rise. Energy prices are going to continue to rise. And they are going to blame the inflation problem on the fact that they printed so much money and interest rates were at near zero. And sure, that plays a role in it, no doubt about it. But as they continue to increase interest rates, but also increase the cost of energy, and the products in which we buy cost more to get from the distributor to us, that all those costs are only going to continue to trickle down on us. Very similar to property insurance. If you're in an area in which they think offers more risk, they are going to price it out accordingly because there's a higher cost for them to service that area. The same thing will be very true with energy. If everything has a higher cost, it's all going to get pushed down to us. And so this video, the inflation fight is a lie. Here's what no one is telling you. You should watch it because it hits it right on the head. This is Sunday's surprise announcement signaled a potential new threat to global efforts to curb inflation and a challenge to the Biden administration, which is pushed for lower gas prices. They say they pushed for lower gas prices, but at the look at what actually is happening, our supply is getting reduced, and we are putting ourselves in a position to pay much, much more for gas prices. So this came out today. It gets so much deeper than what's actually happening though. And this is why, I'm going to walk you through what's going on and what we should all be doing to kind of position ourselves for it. For me, I love real estate investing, online businesses. I think there's going to be a lot of huge opportunities coming in 2023 and 2024 if you position yourself, but you want to just be on the right side of this change. It says, why are oil prices rising and what does this mean for inflation? You have to look past what these headlines are actually saying. They say, what does it mean for inflation? They walk you through a situation in which you really have to question. This is what you don't have to question because this is what's happening. As they scale this up and they start trying to hit these goals are going to mean costs are only going to rise every single month. And you have to ask yourself, at least for me, I ask myself this all the time. There's a lot of people that are extremely bullish on residential real estate and commercial real estate. But if you look at what's happened over the last couple years, with interest rates being so low, and by the way, please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's going on. Today's video is sponsored by my company, GreatCreditFast.com. That's GreatCreditFast.com. We help people fix their credit so they can either get debt-free or position themselves to get a mortgage to invest in distressed real estate because I think big opportunities are coming. So if you want to get out a loan or maybe even possibly get debt free, doing a balance transfer, we would love to help you at GreatCreditFast.com. Give us a call at 561-430-5900. So when we're looking at these goals, right, that they're moving towards, this is right around the corner, by the way. This date's right around the corner. As we start to move towards these goals and costs start to continue to increase, the people that have purchased tons and tons of residential property, commercial property, extremely bullish and very scared of inflation the last couple of years, which made a lot of sense. Inflation was a very, very big problem. But if you look at the residential market, with the average down payment being 6% for a first-time buyer, and a second home, the average down payment 13%. So on average, about 10% down. When you have mortgage rates double, it basically puts all those people into a position to where to afford that same mortgage would cost them about 45% more on a monthly basis, right? Meaning a lot of people lost equity and they're upside down in these properties. And so when you're looking at that, you ask yourself, well, what happens in an environment when they continue to increase interest rates and the job market starts to deteriorate, and at the same time utility bills are going up, property taxes are going up, and insurance are going up? It's going to mean a lot of people are likely either going to turn to being a landlord, like I've covered in actually covered this in a video right here. And let's see right here. And I covered that, but I think that we're also going to see a wave of foreclosures. A lot of people just walking away from their properties. But fascinatingly, we look at what's going on in the commercial sector and how this all kind of plays out together. Commercial, for example, they had like Blackstone. Blackstone put this. They said that you can only take this amount of money out. This came out 4 hours ago. So you can only take that amount of money out, and then that basically halts the redemptions. What are the odds, right? But what's going on in commercial is going to be following in residential, and this is going to play a very, very, very big role in the auto market and small businesses. And so you watch this, right? If you see these office vacancies, for example, this in Los Angeles, this sold for a 50% loss, this Manhattan property. San Francisco office vacancies 7 hours ago approached 30%. 30%. So what does this mean for someone that was investing in real estate the last couple of years? If interest rates doubled and you're having 30%, let's say of 100 units inside of your commercial property, 30 of them are vacant. And at that same time, on the other 70 units, rents are falling, which is also costing you money. Insurance is increasing, property taxes are increasing. And then the cost for you to service that debt is going from 3% to 7%. I mean, it's going to be a problem, a massive, massive problem. The fact that half of all commercial loans are floating rate, basically tells its own story. And so when we're starting to see this movement, and they're continuing, like they're moving, this is Yahoo News, right? Look at these headlines. We're stepping into such massive change, expensive changes are going to be coming. And what I think is going to happen is, what do people generally do when they're getting pushed in between a rock and a hard place? They sell assets. They have no other option. They start to sell things. But if they don't have equity in their homes, they're going to walk away from them, or they're going to rent them out. If they don't have equity in their commercial properties, they're going to walk away from them. They're going to hand the keys back. So you're going to start to see all these different changes occurring in the economy, and they're doubling down on this, right? This isn't going to be something that's just going to fade away. I've seen headlines, people talking about energy prices doubling, and we'll see what happens, right? But I can almost promise you one thing is going to happen. It's going to be prices are going to continue to rise. And so if you look at just the fundamentals, $16.9 trillion in consumer debt, all that debt is going to get more expensive to service every time that they increase interest rates. Meanwhile, everything else around them is getting more expensive. It's a house of cards. That's what we're witnessing right now. A house of cards that's going to fall. And so you want to position yourself for this. The last thing that you want to do, like the absolute last thing that you should do, is be stuck in high interest consumer debt, because the cost will only rise every single month. The interest you pay will only rise, and it gets harder and harder and harder to become debt free if you're paying somebody else 20 or 25% interest on top of costs that have probably already increased 10, 20, 30, 40%. Eggs or food or utility bills or insurance, all of these things are continuing to rise. So if you're paying those costs and then paying an increased cost at your credit card company, it's a recipe to never get ahead. But if right now you are strategic, you become debt free, you look at these trends, you position yourself in your industry or your business, you're going to be able to capitalize on this. I know no one wants to see any of this stuff happen, but at the end of the day, our responsibility is to see things clearly, right? A smart attorney once said that the difference between a great attorney and everyone else is a great attorney always looks at the downside risk, whereas a smart attorney is looking at all risks, the downside, the upside, and really gauging things and planning for every possible situation. And if we're looking at all these chain of events, the possible situation is going to be quite clearly increased cost of living and people selling assets. So I think there's going to be a lot of opportunity for certain businesses, debt consolidation, short sale specialists, foreclosure specialists, bankruptcy consulting, tax. There's going to be probably a handful of industries that I think are going to 2 or 3 or 4x over the next couple of years. And if you position yourself in the right industry and you're getting debt free along the way, your life is going to be a lot easier. What do you think about this entire situation? I mean, what do you think about this? I believe we're going to start to see not just one more interest rate hike, but I think we could see 2 or 3 or more until remember they said that they're going to continue to hike until something breaks. Something already broke. They throw a Band-Aid on it and they're continuing down this road. Huge changes coming. Drop your comments below, hit the like button, subscribe here. And on my second channel, I have a new studio. I'm going to be moving in on Friday, so it's going to be really cool. And I have a couple really big guests that are going to be coming on, so be sure to subscribe over there. And if you help fix your credit, we would love to help you at GreatCreditFast.com. Go there and schedule a free appointment at GreatCreditFast.com, or give us a call at 561-430-5900. And add me on Instagram for short form content that I will not share here. So if you're on Instagram, be sure to add me over there, and I also respond to DMs over there on Instagram. Catch you guys later.